Today, I'm going to teach you one simple scalping strategy. This is something you can implement straight away, and it's a pretty frequent trade. In fact, we got two examples of it from just yesterday, one in the ES, one in oil CL. So the key to any kind of scalping strategy is understanding where you're going to see this type of trade, understanding what's happening to cause that type of scalping strategy, and then also where exactly you're going to enter. So, simple summary, what you're looking for is you're looking for a break of a low. Now, this could be a small intraday low, this could be a larger time frame daily low. And essentially, you're playing for the false break. In order to get the scalp opportunity, that false break occurs, and what's going on then is sellers come in, they try and sell on the momentum of the break of the low, and they essentially get themselves trapped. You see the selling coming in, and this shows up as volume at price. You see volume at price build, and all of a sudden then, when the sellers fail to get the move down that they're looking for, the trapped sellers get pushed back. Now, the scalp opportunity comes here. This is what you need to see happen, that it's these sellers that sold it below the low that then get pushed back on, and when they get pushed out, they show no willingness to try and hold the market down. That's the point where you know that they've got trapped. This leaves a little pocket of low volume. That's your indication to then try and buy. So what you're then trying to do is, once you've jumped up, and it's that little jump that helps, once you jump up, then you're going to try and buy. You're going to try and buy, and as with any kind of scalp trade, you're looking to trade it back to just a recent reference point. You're not looking for any kind of huge opportunity, anything like that. And I will give you an example here where we can use this strategy to actually then find a trade later on in the day as well. But that's the real key to it. It's that expectation that on a break of low, you're going to see this attempt of sellers to get the move going lower. They then get pushed back on, and as soon as they get pushed back, they give up. That tells you that there are no more sellers. There's your opportunity to buy. I'll show you these two examples. I'll show you it with a ladder so you can see exactly what it looks like as the market trades, and talk you through what's going on, where you want to enter, and then where you're going to try and take this trade up to. So, without further ado, let's go and have a little look at these. So, what we've got here, this was S&P on the 9th of September. And this is a breakdown through the regular trading hours low. So this is on this little break down through here. This is the previous low. And then we get this rush down. This is your opportunity for this little scalp trade. And the whole aim here is to then play yourself back up towards 98. Now you can see here on the chart, that idea of the high volume followed by low volume. And what's happened here then is on the drop, you've accumulated high volume here. This is sellers coming in. They're trying to sell. They want to see the market going lower, and they build volume selling at the lows. Then what you're going to get is you get this snap back up. And that snap back up is basically buyers pushing against the sellers who don't stand in the way. As soon as they don't stand in the way, then you've got the opportunity to buy. This is your chance now to get long for the move up, and you're just looking to play it back to the origin of this drop around about 98. Like I said earlier, this also gives you a place to try and buy again later on. And what you see later on is we come back down straight onto that high volume. This was your original entry point on the scalp. This then provides you another opportunity for another scalp trade back up to actually on this occasion go and break the recent high. So that's the essence of the trade. What I'll show you now is what exactly this looks like. You can see these two charts. You've got a 15-minute on the left, a 1 minute on the right. But you want to see what it actually looks like on a ladder. See that participation that's going on. So I'll bring that up for you and we can go and investigate. So what we've got going on here then, this is the drop coming in the S&P. So trading down at 93 3/4, we're going to see this break through the low. The current low at the time that we just pushed through was 93 1/4. So now you've got the break. And if you look at the volume at price over here, you can see that we've got reasonably low volume. As we start to push lower, this is where people who are trying to play the break, trying to play continuation, are going to come in to start to sell. And this is what you're looking out for. This is the bit that says to you, yes, maybe this trade is on. And you see now that somebody's coming in to try and sell 91 1/4. You watch it as we get down here. You see that selling coming in, and they try and hold. It can't get above 91 1/4. So now that you're seeing this, it's not the time to buy now. You need to wait until we jump back through there. And as long as you don't trade a great deal of volume between 91 1/4 and 92 1/2, where you've got that low volume that's already there, that's the point that you want to try and buy. So you're going to be watching this, you're sitting here waiting, you're thinking, right, it's not trading down 91 and a quarter anymore. Get up above 92 and a half, then you can try and buy it. The fact that there's no volume traded or very light volume traded at 92 and a quarter, that's telling you where you want in on this trade. So you're now looking to be long. Your target's already defined. You know that you're looking for it back up to sort of 97 and a half, 98. You've got another little pocket of low volume again at 93 and a quarter. This is another chance to buy. So now that we're through here, the job's done in terms of getting yourself in on this trade. In terms of a stop, you're looking for your stop down below that 91 and a quarter. So reasonably nice tight stop. You're looking around about 6-8 prices on that trade. So not a very big stop at all. And then you're looking for this run up of 5 full handles, so 20 to 25 ticks here. So risk reward is good on the trade. And now it's just a case of allowing this trade to roll back up to the origin. This is your simple scalp. It's not trying to take one tick here, one tick there. It's defining this really clear opportunity. You get that failed break. You see the sellers come in. They fail to keep the move going. Market snaps back up. And as it snaps up, there's your opportunity then for the run back up towards 97, 98. What's important as well, once you're in this trade, understanding that the move is on. You've seen the sellers give up on this. Now you're just waiting for this progression up. And you see that we start to accelerate as we move higher. The acceleration comes. This takes you up towards your target. And this is what you're now waiting for. No need to start to worry and try and get out of the trade here. This is the point where you just wait for it to roll itself back up. You take your profit. It's a nice, simple trade. The entirety of this trade takes around about 2.5 minutes. So it's a very, very quick, very easy to spot trade. And like I say, this comes up pretty frequently. This was one example in the S&P yesterday on the 9th of September. We're going to see another one in just a moment in oil. Once we've hit this target, I'll take you over and we'll look at an even faster version of this in oil. So it's starting to push up now. This is where you're just ticking towards target. Notice there's no pulling back here now. This is just a case of sitting there. You know that 98 is the peak of where that drop came from. So you want to see it trade 98. The failure to then push into 98 that you start to see here and then drop straight back. You can kind of just snatch that trade slightly and just nick that quarter tick away. So that's the simple idea of that trade. It's that high volume, low volume reversal scalp. I'll give you another example of this. This is one that happened in oil. We'll talk about other ways of playing these types of reversals at a later date. But this is one that we saw in oil straight away yesterday. Really, really fast drop. Sellers then try and play the continuation of this fast drop that comes in. So we're right down on that low that you can see on the 15-minute chart on the left. And after this quick drop, sellers get sucked into this thinking, yes, there's another move. And so once you've dropped down to around about 10, 12 area, the second leg of the move, people now start to chase. This is where sellers get trapped. And you see the acceleration down and the flick back up, the sort of snapping of those trapped sellers comes really, really clear on this one. It's a very quick trade. It's much quicker than the S&P one. And from execution to target takes only around about a minute. So the definition of a scalp trade. I'll bring this one up. You can see this on the ladder as well. All right, so here comes the oil move. You start to see the drop. You see it's nice and steady down from sort of 13, 14. So that already provides you a target because you can see where the pace is coming from to the downside. You've got a nice bit of volume just around there, around 15, 16, 17 as well. So you've already defined your target on this trade if you get that scalp opportunity. Now what you're waiting for is, does this materialize? We're seeing the break of a recent low down at 93. You're watching for this drop down and you're thinking, right, where can I try and get into this trade? At this point in time, there's nothing to do. Don't get tempted on these scalps to try and find them all the time, every single drop. What you're looking for is those distinct characteristics. That's what's crucial in any kind of scalp trade. That's what allows you to implement it day after day with consistency. So you see now we're just dropping down towards 5s, towards 6. Now you start to see that little pickup in pace, a double O, straight the way down towards 88. Nice and quick there. There's your acceleration. This brings sellers in. Now the sellers are thinking, yeah, we can start selling this. And just like the S&P, you see that volume picking up around 88. Once that volume's picked up and then you get that jump back, now's the chance to buy. You see there's very little volume done between 92 and 98. There's your chance to buy. So you're buying it once it zips back through against those sellers. They've now got trapped. Unless it starts to fall back now and gets back down to 90, all of those sellers know that they're in trouble. And if we start to then push up through 00, through that extra low volume at 01, 02, you're going to get the same kind of rush towards the upside that we saw in the S&P. So here we go, back up towards 00, 02 trades, 03 trades. You're not seeing the market backing off now. This again is just what you're looking for on this type of scalp trade. Nice, steady ticking up. It's pushing those sellers out of the trade. You've basically got in and trapped those people, and you're taking advantage now of those people who have got themselves caught, and they're effectively pushing you on side as they try and get out of the trade. So you see here, like I said, even quicker than the S&P one. This was around about 90 seconds from your entry point to the target. Straight up, back towards that high volume node, and that gives you your exit up at 16. Again, it doesn't back off on that reverse, just steady, steady, steady up. And that's what gives you that nice, simple scalp reversal trade. There you have it, guys. That's the concept of one simple scalp trade. You can start bringing this in and looking for this every day now. It happens across multiple markets. It's not dictated to or limited to one market. You can see that type of pattern in any market. Once you understand it and learn that pattern, you can bring this into your trading immediately. If you enjoyed that video, guys, hit the like, hit the subscribe button, hit that notification bell. This helps us grow the channel. This helps you get more quality videos that you've enjoyed today. Cheers for watching. We'll see you soon.